The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 29th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the goodness in every situation, every set of facts that the world just simply will toss at us. Every single circumstance. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I do want you to know I'm absolutely grateful for your presence here, and most importantly, can I say most importantly? I just did. I'm here to service you. So feel free to pick up that phone. Dial on in, 877-927-6648. If you can't dial in, we've got you covered. Send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question and in the Tiger's Den, just like Pete D did. Any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow up 87 points. She's trading out at 26,151. S&P up 17. That's nearly 0.6% to one side. NDX 100 on a roar, up a little over 1%, 76 points, 76.49 is her print. Russell's up 6, semis are up 5, trannies up 17, NASDAQ composite up 69. It's mean and green across the board out there. Spot volatility index trade out at 12.21, well below the 50-day exponential moving average. Gold's off $2. Silver, 6 pennies. Light sweet crude up 92 pennies out there, leading the charge the upside. Amazon, 19.85, that's $52 on its way to $2,000 out there or more. Booking Holdings up 18, 19.49 is her print. Google's up 17, Regeneron's up 15. Tesla is the big loser dollar-wise, down nearly $8 or nearly 2.5%. Movado Group down 7, Chipotle down 7, Tiffany down 6. OLED, Universal Display, down about $5. So we can look at anything that you would like to. Just got to somehow reach out to me. Well, let's go take a look at what Pete D wants to look at here. Ticker symbol FNSR. The question is, buy now or wait for a pullback? To answer that question, well, first let's do this. Let's try to figure out what Finisar Corp is doing. Here's what we know right now. We know that price is above the top of a daily box. That says, okay, you're in a breakout mode. You're above resistance. Price oscillator is above zero. You can't tell that here, but I can tell that when I look at my other screen. Same is true. No, it's not true for the week. I don't know if that's the case or not. The weekly time frame, though, price is above the top of its weekly profile, and the monthly, it's not. So just looking at these charts right here, Pete, we would come up with a price target over the longer haul of 24.29. That would be the top of its monthly profile. Let's step back and take a look at the weekly, because in the weekly case, what we can see here is we can clearly see that price appears to be forming an A to B equals CD to the upside. So let's go take a look at those price targets. What I mean by that is, well, first I have to put the tool on my screen out here. If I don't, you won't be able to figure out what it is I'm showing you, because I won't be able to figure out what it is that I'm showing you. But that can be, here we go, 1 second. So we're going to take a look at that lightning bolt tool, the A to B equals CD. Now, what we're really focused on is this swing point from July 9th, had 11 million shares. And when it was passed, which was last week, it was done with accelerated volume. Wide price spread? Yeah, price spread for sure. So it has all the components of a confirmed A to B equals CD pattern to the upside. So as we take a look at that, as we decorate our chart, it has a 1-to-1 price projection of 21.15. But Pete, There ain't no way that Stevie's going to give you 21.15 as a target out here. Why is that? Because the retracement on a weekly basis was just kind of one of those knee-jerk, 3-week type moves to the downside, a 54% retracement. So less than a 0.618, and the move off of the C point has been explosive. So if you and I were mastering the sell the D point, right now we're saying sell the potential D point. Doesn't come into play until we see the 22.44, 24.08 level. And we've got 24.29 on the monthly time frame chart. So at this stage here, Finisar looks good. So the question was, buy now or wait for a pullback? Well, you know, today's candle would be important if it turns out to be a bearish reversal candle. It's not right now. So I don't know what it looks like at the end of the day. The reason is, you know how I hate saying the end of the day out there, although I don't hear people saying it as much as they used to. You know, now we've just got to get rid of people saying, what is the one thing out there? I'll remember it. Let's just stay focused on this chart. Now, my apology, this chart here is not updating because I have so many other things running in the background. But we can take a look at this chart versus this one here, the E-signal chart, which is updated, and see the current candle session. The reason why, Peak, if this were to be a bearish reversal candle today, then I would say pullback. And the pullback would be down to Stevie's green line, which right now is about 1968. It's not that said. It's something else. If I can remember it and I tell you, you'll go, yeah, exactly. When are people going to stop saying that term? But in any event here, the question is that there's a possibility. So this is headed higher over the long haul. And this is where you've got to make the trade/investment decision. But if you're going to look for a buyback, look for it to be somewhere between the 1947, the top of the daily profile, and 1964-ish out there. You know, whether that's worth it for you while it's trading at 2032, you know, for those pennies, for a $24 potential outcome out here, I don't know. So, but that's what I see Finisar doing. I hope that helps you out in your decision out there. What would I do? I would certainly wait for today's candle session to form, as well as tomorrow, unless this thing just breaks out above yesterday's high. Then I'd say go ahead and jump on board. So now let's go take a look at, what should we take a look at during this next minute here? Why don't we got the Dow up 90 points? Why don't we just kind of get a feel overall with regard to what's going on, right? We're coming into a holiday weekend. Always good for us to wrap our head, and it's not the wrap our head, by the way, around just get a bigger global view of what's really going on. So the way to do that is to take a look at the global view of the markets. Always good to come back to this. Now, this chart here, you're going to see if you're watching us on TigerTV. I hope you are. And if not, go watch this when you get home or tonight or whenever you do. You know, just go watch the archive of this because this will explain a lot to you. In the upper left-hand corner is the Dow. We're using the Dow because it's a trophy horse for the U.S. markets. Next to it is the U.K. Next to that is Australia. Then coming back over to the left, you've got Canada, you've got China, you've got India, you've got Germany down lower left, you've got Japan in the middle on the bottom, and then you've got Turkey. I'll get rid of Turkey and we'll put something else out there. Take a look at those trend lines. Where is the market or markets around the globe breaking out? Here at home. We've got more, but here at home. This is where money is flowing to. It's that simple. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back. Let's go out to Ormond Beach and speak with Mike. Mike, thanks for calling. Thanks for holding. How are you?
Steve, I'm doing pretty good. I had some GDX, and I sold it yesterday when it got above 1930, and I'm looking to get back in, and I did hear you mention that you thought the GDX could get back to possibly 1872. You thought that might be a good area to buy. And so I was wondering if anything in your view has changed.
Yeah, possibly. And the reason why I would say possibly is because so yesterday's action, let's just explore the GDX because really you're trading it at this stage here. I consider you to be trading it, which is just perfectly fine. And so from a trading it standpoint, so the individual who called, I think, was Susanna from Canada, or who sent an email. I interpreted her email from before as being more of an investment. So I said, hey, 1872, it's the center of the profile on the GDX. We took a look at 3 different price areas, I believe, yesterday. What took place yesterday is it got into the resistance zone, which is 1945. You sold it, so kudos to you. That gap to the downside. Went ahead and pulled back. And what it was really doing yesterday, Mike, was testing the August 16th swing point. So if I go back to 12 years ago when I first was introduced to technical analysis, which was by Obi-Wan Kenobi, Tom O'Brien, and it was all about volume and swing points. So here I'm going to utilize what really was my early days in the technical analysis. And when a swing point gets tested, such as it did yesterday, the swing point, the high of which is 1895, the low of which is 1815, and it gets tested with lighter volume. What it's telling you and I is there aren't as many sellers on the pullback as there were when this instrument made a bottom for potential bottom on August 16th. Now, yesterday, the volume on that pullback was 52 million shares, and that was going into 78 million shares. What you needed for a full rejection yesterday was a close back above 1895. It actually closed at 1892. Do 3 pennies make a difference? Actually, they do. But what you're getting today is you're getting an even lighter volume test of the top of that swing point of 1895. If going into the close today, Mike, you see a close above 1895, you're probably not going to get a lot of action here. Then you've got a second test of that swing point. I would say that would be a signal to go ahead and enter your trade. There's no guarantee of it, but that's just using just swing point analysis out here. Of course, you would also want to just take a peek to see what's going on inside of gold, just simply because of the correlation that it has, and you'd want to see gold, in essence, beginning to move higher in all currencies out here. It's kind of a mixed bag at this stage of the game. We don't totally have that out here, but just being particular with regard to the GDX, that's how I would play it. That's that, you know, using that original set of tools of testing a swing point with lighter volume out there. Does that help?
Okay. Yes, it does, Steve.
Okay, perfect. Hey, thanks so much for calling. Much appreciated. Congratulations on your trade yesterday, and best of luck on the next one that you go ahead and you put out there.
Okay, thanks. And all the stuff you teach us really helps me out a lot. Thank you.
That's great. That's why we're here. That's why we're doing this, for sure. Let me teach you something else now, folks, and everybody else. It is about, you know, and it wasn't really Tom Cruise that started with the phrase of show me the money, but as we were going into the break of that last segment, it really is about showing you the money. The question is, can you really simplify the market so that it becomes easy from a fundamental and technical standpoint for everybody to really answer the question, what's going on? That Smokey Robinson tune, I believe. Is it Smokey Robinson? But in any event, let's just show you what is going on. We talked about that global flow of cash. Cash has to go somewhere. Remember this, that the majority of money that is out in the marketplace, the majority of it is long only. If it's being managed at a large broker-dealer in some kind of wealth fund, some kind of pension fund, it's basically long only 100% of the time. So what you want to do there, just, you know, as Jim Cramer had said, there's a bull market everywhere. He's absolutely right. There is, because money has to flow there. You just got to try to find where that bull market is. In this case here, what we were taking a look at, well, this is the currency piece of it. Back to this one, where the money is flowing. Right now, just take a look at these 9 charts out here. It's flowing into the U.S., or it is showing that it is flowing into India as well, as it has broken a trend line. Now, subscribers of Mastering Probability know that we take a look at global markets all around the world, because many of them have balanced portfolios, and they're trying to keep a certain percentage of their portfolio in foreign equities, emerging markets, and so forth. I've made it much easier for them to identify which markets are breaking out. It's labeled Breakout Bull. That ain't no bull on my system out here. The colored signals now are changing when the signal changed yesterday. So here what we've got is we've got a breakout bull signal. That may have been today's signal, today's change, by the way. A change from yesterday, so it should be today. You've got a breakout bull move inside of the EWA. That's the Australian marketplace out there. So there's a bullish place. We've got support at 2273, 2251. If Peak D was going to ask me, you know, buy, where do I buy on a pullback, it would be 2251, 2273. Either Stevie's red line, red or green line out there, or in this case here, what looks like the top of the TAS profile. Makes it pretty easy. India, as we talked about, it's in a strong bull mode. You've got Mexico that's consolidating from a bullish standpoint, still bullish out there, 65.60, 65.03, but it does have some resistance, which is the top of its daily profile, where the first two didn't have that resistance. You always want to go take a look at the left-hand side of the chart. This can't do everything, but what this is telling us is, where in the world is Waldo? Where in the world is it that you can go ahead and invest, for those of you that want to go ahead and put money in foreign equities out here? If you take a look at the SPYs, the diamonds, the Qs, and the IWM, the Russell 2000 out there, you'll see each of those signals say breakout bull. That's the U.S. marketplaces out here. So money is flowing into the U.S. Now, speaking of money, that takes us to our second panel. The U.S. dollar index is the currency that everyone is also pouring into. Yes, it's pulled back over the past couple of days out here. So what? It is the one that has broken the trend line. Now, the U.S. dollar, Japanese yen, nah, that's the third panel on the right, upper right-hand side. I say nah. You got the Mexican peso out here. No, the Canadian, I'm sorry. What was I looking at? Oh, that was U.S. dollar. Look, dead center. So you got the Canadian dollar that has broken through a trend line out here. And you've got the Great British Pound that is beginning to break through a trend line. So you can see some currency-wise. And what this tells you is where is the confidence. When you take a look at the currencies, if they are breaking out above trend lines out there, just using a simple thing. Simple, sometimes keep it simple, Steve-O, is the best way to do it, because you can do this at home. You can draw a chart. You don't need to know anything about technical analysis. It becomes easy to draw those trend lines in there. And so confidence is not just in the U.S. stock market. Confidence is in the U.S. dollar index out here. Is money flowing into commodities? Is it? Is it? Now, when you take a look at gold, wheat, corn, silver, rice, natural gas, crude oil, soybeans, or live cattle, there's no breakouts going on. Money is not yet globally flowing into commodities, but it is into the U.S. indices. That's what will keep these things moving. You ready?
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So John in Sarasota wants us to take a look at DEM. Question is, hey, Steve, is DEM something to keep? It's been rather flat. Thanks, John in Sarasota. So this is the Wisdom Tree Emerging Markets High Dividend Fund out here. And here's what we can share with you at this stage of the game, is that from a daily standpoint, you're above resistance. That being the TAS market profile on a weekly basis, you're above resistance. By the way, resistance daily, 43.43. Resistance weekly, 43.75. And you can see where for the last month it is, but last several months, since May, it's been really consolidating, John. So here's your consolidation level. Maybe to answer your question. So you're collecting dividends. I don't know what the dividend payout is. It's trading between, in essence, 46.22 and 42.94. You'd like to see this thing from a price standpoint be able to take out 46.22. Right now, on a monthly basis, this is a hammer candle, so maybe the 42.94 is solid for you. Don't know that does not mean that it'll take out 46.22 out there, but you know, I don't know how long you've been in it. I'd probably be patient out here with regard to this. Hopefully, it's just a normal portion of your portfolio. Certainly not a great performer, emerging markets, and so to that extent out there, even though the dollar has pulled back. So here in essence would be, I guess, the trend line. That's a trend line that I would use out here. You know, so you've got to think of it like this. Well, I'd like you to think of it like this. Here, let me put the U.S. dollar index up here. DX. I'm just going to put up the. I could put up the current contract, and it's going to give us profiles and so forth, profiles and courage. You know, we know about the breakout inside the U.S. dollar. It's going to the first set of charts, John, that I gave to you, I'm just trying to find a good way to communicate this. The first set of charts that we took a look at with regard to where's the confidence in the marketplace. Let's go by the first. Well, let's take a look at currency. Just simply come back to currency. When you break above trend lines, longer term trend lines out here, it's just telling you where the confidence is, and the confidence around the globe is inside the U.S. dollar index out here. I don't think that changes. Now, for a week or two, or it could be a month or something like that, yeah, what you're in or emerging markets could be a good trade, but the move higher inside the U.S. dollar index is not over. Now, if you have the belief or the opinion that I'm absolutely dead wrong on that, then go ahead and invest in anything emerging out there. But just be careful when you see that next bottom inside the U.S. dollar index as it heads higher. I'd put it to you like this. Every day you have the opportunity to convert every one of your U.S. dollars to euros or pounds or yen or Turkish lira out there, you know, or any other currency that you want. Are you ready to go convert your U.S. dollars to euros? Is that a trade you would take? Or would you do the opposite? If you were in euros, would you be saying, you know what, I'm going to go start taking my portfolio and putting some of it just simply U.S. dollars out there? That's a decision that you have to come up with, I think, when you have a bigger overall focus on something like what we just looked at there, that Wisdom Tree DEM out here. So prices up against resistance, that trend line, just put that on your chart. If price can go ahead and close above that, then, you know, how much higher, 46.22, just simply watch what takes place. You know, watch that as so longer term. Yeah, I don't think it should be there. I haven't looked at what's inside the ETF, but I can take a look at how this is trading and kind of in my mind picture what it is that you're dealing with. And I'm going to say, no, you shouldn't be there. Why? Well, first of all, you're absolutely going to get a bigger bang for your buck as we take a look at what's going on inside the U.S. markets. Those blowhards, can I call them a blowhard? Those blowhards on the other financial channels that are telling you all the reasons why maybe the U.S. markets aren't going to head higher in the valuation and the this and the that. You know, I don't know what they're smoking out there. What they're certainly not looking at, they're certainly not looking here at the S&P 500. Right? So here you got the S&P 500. Let's just say you don't have to make the decision. Should you put your euros into dollars or your pound sterling into dollars? if you're in pound sterling, you don't. You say, I'm going to put it in the S&P 500. Why? Because this is long term. These are monthly charts out here. Because it's broken out on my screen. It's broken out above resistance. I'm a momentum trader. I'm going to go with the momentum out here. Same thing is going on for the traders inside of Japan. They're looking at their screens. They're looking at the breakout. They're saying, finally, thank God, if I can say that, I just did, the folks over in the U.S. are now seeing a breakout as well. In euros, they saw the breakout several months ago, 3 months ago, inside of the S&P priced in euros. This is what traders really look at out here. This is where you don't have to be where the momentum is, but this is where the momentum is. It is that easy. If we take a look at the 4 core indices out here, the Dow upper left, the S&P upper right, the NASDAQ lower left, the Russell 2000 lower right, you see A to B equals CD patterns that are underway. These are quarterly time frame charts. You will see, you know this. You know this. I'm speaking to everybody out there. You know this. We sat here and we said we came back earlier in the year or last year, and we saw the breakout inside the NASDAQ 100. It was a consolidation. We said from a technical analysis standpoint, the NASDAQ 100 is headed to the 8,800 area out here. 86, 87, 88. We're not going to worry about just exactly what that figure is. You've got an A to B equals CD. You're at the 1-to-1 right now. If you were to sell the D point on this, I would shoot you. I can't shoot you. And I would shoot you. Just because the market makes a 1-to-1 A to B equals CD does not mean it's over, not even close to over. This is going to continue to head higher. Why? You break a consolidation pattern that's been in play for 20 years. I'm not going to worry whether it's 19, 18, or 20, or 21 out there, or 22. It's been a long-term consolidation. Finally, you break it. You make a measured move equal to or greater than that consolidation. We can use these A to B equals CD patterns. If I'm going to teach them to you on the short term, I've got to teach them to you on the long term as well out here. And these show that prices are headed higher as well. Now, that's the longer term view, which is really, if you're invested in a dividend fund in emerging markets out there, don't be. Don't go after. Maybe it's a high yield dividend play out there, but don't be chasing that. That would be like saying, you know what, you could make a lot of money by buying some of that Turkish debt out there that's paying 20% or 21% or so forth. Don't do that. You don't have to do that. When right in front of you is where you know the action is. If we didn't know that the action was here on everybody's screen, that would be a different story. And will this game come to an end? Yes. But right now, it is the only game in town across the globe. Now, that doesn't mean that we can't see some type of pullback that begins today, tomorrow, Friday, Tuesday of next week out there. But those are pullbacks out there that you certainly want to be able to try to find as a bottom and buy them. Right now, looks like the S&P priced in dollars is headed to the 29.80, 29.96 level, certainly 29.54 out there. Those are just horizontal trading range levels. And everything is up above resistance there too. I hope that helps answer all of your questions. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Kind of quiet out there in the let your fingers do the walking lanes, so no requests other than from John. So we're going to go to Peak. This is going to be the Peak D Stevie show out here. So one of the things that Peak has asked is to take a look at Overstock.com. And the question is, I believe the question is this a bottom out here? Yeah, I think that's what it was, right, Peak, out there? So, and Peak, you're asking, do I see a bottom in gold? Do I see a bottom in Overstock? And then anything else that you want? Do I see a high in the NASDAQ, right? So I think those are the three things out here. Let's take a look at Overstock. Is it a bottom out here? Well, it made the top the way that it's supposed to make a significant top by moving higher, doing less relative energy and so forth. So that was a signal that was drawn out here. Prices just right now coming back and testing a swing point. And so just like Mike and I did the GDX, this would be the only tool that I have to try to help answer that question, whether Overstock.com has made a buyable bottom. And the swing point that we're dealing with, this is on a daily time frame chart, takes us back to June 28th. There was 1.4 million shares. The exact number was 1.391347, 1.4 million shares. Now, as prices pulled back into that swing point, the bottom of which has never been tested, by the way, which is 28.15. It was coming back with 4 million shares, 3.8 million shares, 2.2, 2.5, 2.3, 1.8, 1.4. Never at 1.2 on August 24th was the lightest volume test of that area, and we're still in there today, and price keeps finding resistance peak at the bottom also of its daily profile out here. So I would say if you're looking to take a trade on this because you think that it has bottom, first you'd like to see this test this level 30.49, definitely do it with less than 1.4 million shares, and then you'd like to see it close above 31.17. That's what the bottom of that TAS box is right now. If it closes above 31.17, you're at 30.25. Then you have the potential, at least the potential for a trade that takes you into the 34.91 level. So this is what I see when I take a look at Overstock.com. I don't have anything good on the weekly or monthly time frame out here. In fact, everything is below support on those time frames. So it would be really a trade, so to speak, at this stage of the game more than anything else. So OT OSTK, folks, for those of you that want to go take a look at that specific equity out there. So, Peak, I hope that answers your question. Do I think gold has bottomed? I do. I still think gold has the potential for a bottom. And it's just simply for one reason. There is a tool that Stevie does have that identifies the greatest bottoms, and as well as the greatest tops out there. It is Stevie's Rhodes Momentum Indicator tool. Now, it is present on the continuous contract for gold. It is not present on the current contract for gold, the December contract. It's not present there, but that's okay. And if we take a look at, those are black arrows on my screen, and you just simply take a look at those patterns that form there, those were significant bottoms. And in each of those cases, it's not like gold just simply took off to the upside. So that's one. So it has the makings for that for sure. The second thing that it has that has begun is we have begun to see gold moving higher in the major currencies out here. The major currencies being right here. The one that's been struggling the most has been euros out here. But euros are not going to control the world. In fact, they're far from it. People are looking to get rid of euros out there. Hey, you want to go ahead and exchange your dollars for euros? Go for it. But don't do it because I told you to do so. I'm telling you not to do so out there. So right now, today, Peak, gold is struggling in pounds. We can see that. It just takes you 931 British pounds sterling to buy an ounce of gold versus $1,211 US dollars out there. But we have the makings of a potential bottom. I especially like the hammer candles at the bottom in pound sterling, in yen, in euros out there. It at least has its back up against the wall to say, okay, at least a trade. You put that together with Stevie's other pattern out there that identifies really good bottoms, and you just have to go for it. You don't have to, but Stevie has. You just go for it. Whatever happens, happens. If you have the proper position size and the trade goes against you, you survive to go do the next trade. If you over-leverage yourself to the hilt, you don't sleep well at night. This is a game where you want to sleep well at night out there. So to answer that question, yeah, I believe that that gold has formed, has the possibility of forming a major bottom. It has all the patterns out there that you like to see. With regard to the NASDAQ, the NQ is what I'll take a look at here to help answer your question. And because of the first two segments out there, you know our long-term belief is, and especially with regard to your 401k money and so forth, just keep it invested in the U.S. stock markets. You go look at some foreign equities. Go take a look at the Rhodes Momentum Indicator, sign up for Mastering Probability. Each day you'll see what's going on in worldwide markets out there if you're trying to do that. And at least you'll see the best ones to invest in. With regard to the NASDAQ, the only signal that we can really see out here, Peak, is the mere fact that you are the master of Peak 4. I'd like to think I'm a master of Peak 7, singing in the key of G. Now, I don't know if this is really the 7th wave move, right? Because it could also be, what wave could it be, Peak? You know, it could be wave number 2. That's it. So the question is whether or not this thing has recycled, it hasn't recycled. I don't know the answer to that. I know that we have the potential that it's in wave 7. I know that all of the equity futures markets, not all, I take that back. I know that 3 of the 4 equity futures markets, as we speak right now, are in wave number 7. And I am not one to ignore the great tunes played by Stevie Wonder, because he can sing in the key of G out there. So until we see otherwise, in trying to answer your question, is it possible that the markets are forming some type of short-term top? The answer is yes. Now, that answer will not get my vote until we see a close below Stevie's green line. Inside the ES Mini, it's 28.88 right now. Inside the NQ, it's 75.35. You might say 75.35. You're at 76.53. That's 120 points. That could be nothing more than just a pullback to support, though, folks. That's really all that would be. And inside the Dow, it's 25.928 out there. So is there a possibility? Absolutely, there's a possibility out there. And what else? How else would we know if that possibility is more than just a possibility out here? Well, let me get rid of this. I don't know. Let's go take a look at a couple of other things out here, because let's go see what the advanced decline information is doing inside the New York Stock Exchange. I don't know. Well, now we know. It's continuing, even though you've got this great party. This does not change my longer-term view. Now, I'm really just trying to answer Peak D's shorter-term view out there. So those of you that are long-term gamers, Don't listen to what I'm about to say. Inside the New York Stock Exchange peak, you see how that advanced decline oscillator, that's panel number 2, continues to make these little lower highs out here in the face of rising price? That has always been, if this continues, a problem. It doesn't become a problem, though, from a significant standpoint until that AD line gets below 0. And when it can do it simultaneously with a spot VIX index above the 50-day exponential moving average, 1306, that's where things really get rocking and rolling to the downside. I'm not saying that's what's going to happen. I know what to look for. And this still says you got to be careful out here. Longer term, keep that money in. This is the game in town, the U.S. stock market, U.S. dollar index. Maybe even gold, too. We'll see. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Thanks so much for being here. I believe David is on vacation, if I'm not mistaken. Of course, many people on vacation. We're coming just down to the end of what seems like summer, although it doesn't seem like the end of summer down here in South Florida. Hey, the folks at Timer Digest came out with they do a monthly issue out here that just simply lets everybody know, the new top newsletter writers, where everybody is at. It's their issue that was August 27th, so I guess a couple of days ago. For the time period between August 24, 2017 and August 24, 2018. I am the only newsletter writer that is, well, one, I'm still #1 in the S&P 500 by a long shot out there. Still #1 when it comes to the 6-month time frame. I did drop down to #2 on a 3-month time frame out there. I'll make it up. We'll still get somehow back up into that top signal out there. The cool thing is that, and I was #1 in gold, and I had a couple of long calls out there that certainly didn't pay off, and that dropped me down to the #4. But I'm still in the top 5, and I'm solidly in the #3 spot when it comes to Treasury bonds. So all the tools that you and I use here, and all the tools that subscribers receive from the education, from the workshops that I do that automatically come with becoming a newsletter subscriber to Mastering Probability, these are what I teach you. So you can do this. I guarantee you. If I can do it, you can do it out there. And it is just using these simple sets of tools that you and I talk about. So there's no better time to try Mastering Probability. I don't normally do the commercial for that. It enough out there, but it is worthwhile, for those of you that want to learn. And there's a handful of you out there. Well, there's many of you out there that just simply from a technical trading standpoint. Now, my goal, by the way, come the end of the year, is to certainly be #1 in the S&P 500, but to be the only newsletter writer that is in the top 5 of all 3 areas that they track out there. That would be a cool thing. That's my outcome. So make sure you keep me on the right side of the trade, and I'll do everything I can to keep you on the right side of the trade as well. Thanks so much for being here, folks. We'll see you tomorrow at about 1 o'clock. Have a great Wednesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.